Mortgage Mark here. Let's talk about when MI is required, whether it's MIP, PMI, etc. There are certain programs that do require it. FHA, for example, they're always going to have their upfront MIP. They're always going to have a monthly assessed with it. USDA has a monthly assess as well as a funding fee upfront. VA does not have any mortgage insurance. They do, however, have a funding fee. The exception is if you're a vet with some disability, there are instances where that funding fee for VA can get waived. But overall, those are programs where typically MIPs always, or PMI is always going to be required, depending on just what you're doing. So the MIP for government-backed loans is typically mandatory regardless of your down payment, no matter how much you're putting down. For conventional loans, like the Fannie Mae, the Freddie Mac, 20% down will avoid that MIP. So if you guys put down a 20% down payment, it is not there. Or if you don't put down that 20%, you can do a first lien and a second lien to avoid that MI. Is that the best option? To be determined, guys. Let's run the numbers and see. There is no blanket like, hey, do this all the time, every time. Certainly if you got 20% and that is a great option. Doesn't mean you shouldn't take MI, maybe put less down. Again, there's a lot of things to consider. If you got a bunch of debt, consumer debt, let's pay that off first. MIP is not all bad, guys. It can go away on conventional financing. For the government ones, not so much, guys. But again, let us know if you have any questions. We'll certainly give you more information as it relates to each specific program, and we are certainly here to help.